Yeah, welcome guys to Forex Success. Okay, these are structures that will help you to make money on step index. When you spot them out, just follow the previous pattern. Remember, guys, what's price action? Price action is simply using previous market pattern to predict the future. Yes, so that's just price action. So this is what I'm trying to show you. I explained to you guys how I took a trade from this point, seeing these structures up and down. So getting here, it moved back to the downside. So what I will be expecting is for it to go back to this same side. So I took a buy right here, having the stop loss below this previous point. Then the market moved, took profit right here, seeing it at this stop again. The next prediction, guys, will be that it's gonna sell back to the downside, leaving your stop loss above the previous high. You see that move to the downside again. So I showed you the profit on my previous video. Then the market moved to the upside. The reason for the stop loss is in case you take this point again to the upside, having a take profit right here, and now you're seeing some reactions. Okay, though we didn't had any reaction at this point until it moves to the upside. Let's say you now decide to take another sell again at this point, having a stop loss right here, it will hit the stop loss, so you won't have to lose a lot. So always use stop loss, guys, when you are trading market structures. It is very, very, very important, so you won't have to blow your account. So you just have to lose a bit and gain more. So that's just it. So currently now I'll show you the one I'm currently on. Look at the similar pattern, similar movement. Move to the up, step index, guys. This step index move to the upside, came to the downside, again to the up, downside, up again. Look at it, giving me the same structure. So at this point I took in for a sell. You see that, guys? I took in for a sell right here, another sell right here. What is the stop loss? Stop loss is above the previous. Look at this week right here. That is my stop loss. Well, what am I expecting? That the market is gonna come down, and this is my take profit right here. This sell position right here is the swing trading that I'm holding for step index. Remember, guys, I told you guys I'm selling step index for long-term frame, considering the fact that it's unable to break through this resistant level. So we're expecting the price to move back to the downside. So that's the trade I'm holding for that long move. Look at the weekly time frame, expecting the same thing to happen on step index. So guys, these patterns, it's very good. It's going to be very helpful. You can even trade it without using any indicator on your screen. Look at it. It's a very nice pattern. So once you spot out stuff like this, it's just for you to put a stop loss above the previous one and expect it to come down to the previous one. That is price action, using previous market movement to predict the future movement. That is simply price action. So right now, if you also want to confirm with your indicator, you will just need to go to a smaller time frame, having your 40 EMA, which is period 40 shift 0 method exponential apply to close style 3 pixel. You click done. You just go to 5-minute time frame and get good entries right here. You see that? So getting good market structure from the 1 hour time frame shows you that it's going to sell, and the 5 minute in moving average gives you a good entry as well. But for using trading with these chart patterns, the indicator is actually not that necessary. Yeah, it's not that necessary. Already you've seen what you're trading. That is, you are risking this to get it to the downside. Finish. And you trade risk free. So you can go to your pips calculator and calculate how much you are risking. For example, if you are risking like this particular trade, which I entered at 8574, and the stop loss is at 8579 with a lot size of 0.1, definitely means I'm risking $5 on that trade. So it's quite very simple to calculate, to understand. Okay, so these are the trades that are currently on profit. This is the swing trade. You can see it's on drawdown of $14 right now, but I'm still holding it strong. Then the trade that I took today, which are for what's it called, for the structure, market structure, which I took there just to get the profit and take profit right there. So these are the trades that are also on profit. So this is volatility 25 index that I am swinging. You can see it's moving right to the downside. My first entry, I got this retracement right here, opportunity for me to take another sell. Took in for a sell. Already I know that on the long run it's gonna move to the downside. That is giving me nice sell. Look at it, sell continues for volatility 25 index. I gave this signal, guys, so if you are not following, that's actually your fault. That is, if you don't have your notification bell and you are not subscribed to this channel, then you definitely miss out some weekly analysis, some long-term analysis that I do, and put it out there for free so that you guys can trade accordingly to that direction. So this is volatility 25 index and we are expecting it to move to the downside. So guys, trading is quite simple, but if you trade with good risk management, believe me, it's gonna be really simple. You won't have to stress your heart, that's your mind, in trading. Exactly. So what we're trading, guys, this is synthetic indices where you can find crash and booms, volatility index. They are all 24/7. That's, the market doesn't close. You can trade it every day. So click on the link at the description below on Deriv to create an account. Also, the link is at the description below to create an account so you can start trading. Make sure you join our Telegram group. The link is at the description below for real. So this account, I'm still growing this account and we are moving quite well. So thanks for watching once again, guys. This is Forex Success and we got you covered. We drop strategies for you to trade and make money. Yeah, thank you guys once again. Yeah, and guys, this is the end result. You can see that, guys. So this was the trade I took. Look at it, up down move, like I told you guys, and look at it. I took the sell and I had a stop loss right here. Remember, I took two positions. I had a stop loss right here for the sell, and look at it, it gives me the down move. So this trade was actually taken without any indicators. So guys, when you see or when you spot out such market chart patterns, such structures, you just do something similar to the previous one and have a stop loss right there in case it doesn't go that way. And look, sell. And so now the downtrend will continue. That is my swing trade we continue. You can see, so I took out profit for the first trade because I just actually wanted to take this down. Then these two positions on step index is what I'm holding for the long term. That is the swing trading. So that's just basically how you can do this. You can put in these patterns to work and put this idea into your trading and you become better, guys. At least you make profit from it. We know indicators fail sometimes, so as well as this pattern, they fail sometimes. Yeah, for real, they fail sometimes. So that's why you always need to have a stop loss when trading. There is no 100% anything on trading. Anything 100% doesn't exist on trading. Yeah, because I remember I took this trade and I had a stop loss right here, but then the market moved to the upside, and then hit my stop loss. Yeah, but then it later came down. So that's just how you can simply do this. Thanks for watching, guys. Forex.